Hello, good afternoon. My name is Elizabeth. I will be your moderator today. Today we have Richard Byworth. He is the CEO of Diginex. Diginex is a digital financial services and blockchain solution company that partners with institutional investors, corporations, and governments to make digital assets more accessible, business processes more efficient, and societies more secure. Richard, the floor is yours. Thank you.
Thank you, Elizabeth. Hello, everyone. The vision of Diginex is to bring digital assets to the world, institutions and individuals alike. Today, I'm going to explain our business model, the opportunity set, and our plan to drive significant future value. Diginex is the first and only full digital asset ecosystem comprising a crypto exchange to be listed on NASDAQ. This is important as it demonstrates a level of transparency and governance that the crypto industry has been significantly lacking to date. As an example of this, in just the last 2 months, we've seen one of our largest competitors get indicted by the DOJ around KYC and AML breaches. And our other largest competitor in China, their CEO was arrested and hundreds of millions of dollars of assets frozen on their platform. The industry is crying out for an SEC-approved company with NASDAQ standards of governance and transparency. This industry has grown exponentially, and with increasing institutional interest, this is only set to continue. We're focused on 2 key areas within the industry: derivatives, a core requirement for the majority of institutional investors to help optimize portfolios, and the other, the disruption that this technology can bring to capital markets. So what is the size of these 2 opportunities? Derivatives have started to emerge over the past 3 years, mainly in the form of a perpetual swap product. That's a futures contract with no expiry. Spot volumes are starting to grow, or continuing to grow, as we see institutional adoption. But at 3 times the spot market, when we compare the derivative market to traditional markets like FX or interest rates, that have derivative markets many hundreds of times the size of the spot market, we can see that there is meteoric growth potential to this market. Represented here is the pink market around the current spot market in turquoise and derivative market in dark blue. We can see that with appropriate product and infrastructure, this market can grow significantly, potentially by as much as 20 times. The market opportunity to disrupt the capital markets is a different level of potential altogether, but we are far earlier in this development, and this is going to take time to draw out. The basic opportunity can be understood by seeing the size of market that was disrupted by Amazon through its usage of the internet. Over a 25-year period, Amazon went from a small startup to controlling around 14% of global retail sales. So with the speed that this technology is now compounding, blockchain will likely disrupt capital markets far quicker than Amazon was able to take that sort of a share of the retail market. And we're already starting to see that growth. The 2 key barriers that will impede this adoption are unclear regulation and investors' own infrastructure. So this year, we've seen a global government response to COVID that's seen a level of fiscal and monetary stimulus that we've never witnessed before. And this stimulus has been the reason for much of the institutional adoption over the past year. MicroStrategy's CEO was quoted as saying he felt as if he was sitting on a melting iceberg with $500 million US in his corporate treasury before he converted it into Bitcoin. Last week, he completed the sale of $650 million of convertible debt to buy more Bitcoin. Paul Tudor Jones, the macro hedge fund manager, is into Bitcoin, stating last week that Bitcoin is the wrong price given the level of gold's market cap. Stan Druckenmiller, Bill Miller, and Raoul Pal are all other famous investors that are getting very heavily involved in Bitcoin. PayPal watched over the last year and a half as Square's Cash App increased sales of Bitcoin quarter over quarter consistently, with last quarter coming in at $1.63 billion of purchases. Square themselves added $50 million of Bitcoin to their own balance sheet, and on October 21st of this year, PayPal officially launched their own service, immediately opening up 26 million vendors globally to cryptocurrency holders. And the banks are coming too. DBS, Goldman, and JP Morgan all announcing plans recently. Nearly all of these developments that you see here have been made in just the last few months. Momentum is compounding. So how does the Diginex business model address these two very sizable opportunities? Well, first, we've built and launched our own exchange, Equos. Equos operates under an exemption from the Monetary Authority of Singapore within their new Payment Services Act. And a regular question that we get is, why does this industry need another exchange? So here we present some of the many differentiating elements of our exchange. First of all, we're a white hat player with a regulatory focus. Our KYC and AML process can't be circumvented, and our NASDAQ regulated governance gives assurances to institutional investors and individual investors alike. Segregation of duty is key for institutions, and managed accounts is key for asset managers. Today, we only list Bitcoin and ETH. The focus on derivatives around the market is mainly on those two assets, with Bitcoin especially becoming core collateral to many players. We will list more crypto, and future listings will go through a similar process to what we see on traditional stock markets today. And that will serve as a first layer of protection against many of the illegitimate projects that we've seen. And these are protections that aren't offered on other exchanges. Innovative products and infrastructure are heavily centered around the derivative opportunity. That includes things like an improved approach to the perpetual futures product I mentioned earlier, a fairer, more transparent liquidation process, portfolio margining, and cross-asset collateralization, all rolling out in the coming months and quarters. Which brings us to the roadmap. So our current offering includes spot markets in the highlighted pairs. And in the next few days, we will see the first rollout of our derivative products, with Bitcoin perpetual futures coming first. On-exchange credit has been offered to select liquidity providers. And by 2021 first calendar quarter, or our fiscal fourth quarter, we will bring borrowing and lending. Our first fiscal quarter of 21-22 will see the launch of options product and portfolio margining. So other key features targeted more at retail will feature later in the roadmap. In the future, we expect to offer products in the US, but at this time, we're focused on the sizable global market opportunity, particularly in Asia, but also in Europe. So, as discussed, the exchange is quite differentiated in terms of offering and roadmap. We launched our exchange 5 months ago and are trading around $5 million daily, purely with spot markets. Derivatives will quickly grow that. As an example, Binance quickly 20x their volume with the introduction of derivative products. Coinbase are very large in spot, but don't offer derivative products. So here we really get a flavor of how much upside there is as we roll out the new products. Today, our market cap is just 200 million for the entire ecosystem that includes our exchange. Coinbase and Binance, two of the industry's leaders, are at rumored valuations well north of $10 billion. So if our derivative product rollout is successful as we hope, even if Diginex was just an exchange, there's a lot of upside potential. Diginex is a venture capital type play, but tradable on the public markets. Binance launched their exchange 3 years ago and last week announced that they will make $1 billion of profits in 2020. They also accidentally released a document explaining how they circumvent US regulations. So we also anticipate that that venue will come under greater US scrutiny from regulators. So it's for good reason that more white hat and regulatory focused exchange trade on much higher multiples of volume. And as a crypto fund manager said to me last week, the industry is at a turning point. The next wave of growth is institution-led, and they need players like Diginex. So obviously the exchange is central to what we've built, but there's a lot more. Our custodian Digivault is currently being integrated to the exchange as part of a multi-custodian offering. It's CREST certified and Cyber Essentials Plus accredited for cybersecurity. That Cyber Essentials Plus accreditation was designed by the Ministry of Defence in the UK. We are the only digital asset firm to get that accreditation. This team is led by the ex-Ministry of Defence security specialist and ex-Royal Marine Commando, Rob Cooper. Rob has hired and built an exemplary team and product which continues to add features and functionality required by some of the world's largest financial institutions. The importance of a reliable custodian can't be overlooked. Indeed, it's the foundational piece that major financial institutions look to solve before ever engaging in this asset class. Over to Diginex Access. Access is a multi-venue algo trading platform. That effectively means that it aggregates pricing across some of the largest exchanges and, of course, Equos. This allows new traders and fund managers to operate across multiple platforms with ease. We've got a couple of competitors, but we have a significant edge. We've partnered with and integrated with two of the world's largest trading technology firms to integrate Access into both of their portfolio management solutions. This provides us a huge pipeline of institutional clients who want to start trading crypto, but use their current systems to do so. And Itivity, we will be starting our marketing program with them beginning early in January next year. Bletchley Park is our asset management group. We're a regulated asset manager in Hong Kong and Switzerland. Our first fund is a fund of hedge funds providing a market neutral approach to this asset class. Building this fund has provided us unique insight into the requirements of fund managers in the industry, and that's then helped us design the exchange with a lot of the infrastructure that they've been missing up until this point. The final piece of the ecosystem is our investment bank, Equos Capital, and we operate under an FCA regulated entity for corporate finance and for securities distribution. This business is effectively a securitization advisory firm for digital securities, and in time, Equos, the exchange, will be licensed as a marketplace for securities, and Digivault already in the process of being licensed as a digital security custodian. Having that regulated vertical will help us expedite the growth of that capital markets digital security opportunity that I mentioned at the beginning. So now you see the complete ecosystem under the Diginex group, and it's hopefully clear how everything pulls together, drives business to Equos, and accretes value. The digital asset opportunity has been massively expedited this year with the advent of global pandemic and government's fiscal and monetary responses to that pandemic. Next year is going to likely see significant acceleration in the value of Bitcoin and broader digital asset adoption. Diginex is the pure play digital assets company and the first and only to be listed on NASDAQ. Well, thank you very much for listening. I'm going to open up the floor to questions, and joining me for the questions is our head of IR, Ross Dunwoody. So I'll open the floor to any questions. Elizabeth, I don't know if you'll be fielding questions from the audience.
Everybody, you have about 7 minutes to ask away any questions you'd like. Thank you so much.
Hi, Richard. I got a sense that you're quite bullish on the industry. Obviously, you kind of have to be. I kind of have questions about the price of Bitcoin because, and as it relates to you, because you ask people, a lot of fanatics think it goes up. A lot of equity guys like us, at least the majority before this year, were not very hot on Bitcoin or we're skeptical. But what we're seeing now is regardless of the price, there's going to be action in the market. People are going to be buying if there's volatility, even if it goes down 50%, and then it ranges in the 20% range after that, then there's going to be buying. Is that what you're, are those all perfect scenarios for you, regardless of the price?
Yeah, look, with derivative products, all these sorts of scenarios are very good for us. I mean, volatility is great for anyone operating a platform where active trading is good. We see volumes on our exchange ranging anywhere between, just for spot markets, ranging anywhere between $3 million to $20 million per day. And it's on those highly volatile days that we get those 20 million volume days. So it's the volatility that comes with this asset class is very good for business when you're operating a platform like this.
Okay, understood.
So also you mentioned that you were going to trade Bit and Ethereum initially, and you were looking at other coins. What kind of rules are you going to have to adopt new coins when, since you're trying to be like the market leader here, you're going to set the standard. So what standard do you have for these new coins?
So these are things around protocol integrity, security, making sure that there is reasonable volume in these coins, that they're tradable. So you don't get these pump and dump schemes that you see in these very low liquidity coins. So it's really about making sure that the credibility of the project is robust, making sure that it's built with viable integrity to the platform. We check the codes of these contracts as well, making sure that they're regularly updated. For example, Litecoin, that's a coin that a lot of people look at. There were no code changes made for the last 6 months. So it shows you that no one's working on this protocol. So it's these sort of integrity things that we monitor when we're looking at the listing of these coins. And yeah, I can tell you that Litecoin won't be listed on our exchange.
What's your financials look like?
Yeah. Hi, Kevin. Yeah, we're at an early stage of revenue. So we kicked off the exchange, as I mentioned, 5 months ago. A lot of the ecosystem has been launched recently, but all of the products are now live and producing revenue. So with that ecosystem slide I showed at the last point, each of those are now in early stages of revenue. So we're now really at the point of pushing forward with a lot of sales, a lot of client acquisition, and getting in front of these institutions that want to be participating in the growth of this new asset class.
How much cash you have, and do you need to raise?
Ross, can you address this one?
Oh, hello, and thank you very much for the question. So throughout the process of listing, which occurred on the 1st of October of this year, together with the private raise leading up to listing, as well as the cash that was not redeemed in the SPAC, we raised approximately 50 million US as part of that process. Right now, as Richard mentioned, we've gone through a very significant investment period, building all the various platforms that we have available and ready to go at this point in time. We believe that raise through the private raise, as well as through the SPAC listing, it's given us enough runway to build what we see as a robust platform. So we don't have any plans at this point in time, but we'll continue to review the capital markets. Clearly, we are in a growth industry. We are in a growth phase as a company as well, so we'll have to bear that in mind.
Thank you.
So if I understand the structure right, you're listed on the NASDAQ, of course, but your financials are in Indonesia. And then I also see that you're listed as your corporate headquarters are in Hong Kong. Is that correct?
No, our corporate headquarters are in Singapore.
Okay.
We don't have any entity in Indonesia.
Okay.
We operate our main tech hub out of Vietnam, so it may be there that you were looking at. We operate our asset management firm out of Switzerland. We operate out of the UK as well under the FCA regulated entity, as I mentioned before. So the whole of the custodian team is sat in the UK. Where have I missed? Singapore. Sorry, Hong Kong. We also have a decent amount of people in Hong Kong.
Okay. And then what do you think, are there going to be any issues caused by this whole Brexit mess that's occurring, right? Since you said that you're under the guidelines of the UK.
Yeah, no, look, the UK regulator has actually led a lot of the way that the European Union regulates. So actually MiFID was incepted by the UK and driven forward by the UK. So certainly when it comes to the AMLD5, which is this key KYC and AML regulation that the FCA has rolled out, that's a FATF compliant regulation, which is a global regulator. So that's a regulation across all of the European Union and the world, in fact. So any major financial center is a FATF compliant.
Thank you.
All right. Well,
Where
thank
do
you
you
very much
see
for the
where do you
session.
where do you see yourself in 3 years?
In 3 years, as I say often to the team, if we're not dominating this industry, we've seriously put our foot wrong. We are very, very well positioned. We've come at this from a very different angle to the incumbent players. And yeah, I think that that will be a very natural path if we play our cards right.
Perfect. Thank you so
Thank you.
much, everybody. That was Richard Byworth, once again, the CEO of Diginex. Thank you, everyone. I will go ahead and conclude this meeting.
Thank you, Elizabeth.